Welcome to the latest episode of our podcast series for financial advisors. Today's episode is the $129 billion Blockbuster move, Shirl Penney, and why this transition marks a new era for the industry. It's a conversation with Shirl Penney, President and CEO of Dynasty Financial Partners. I'm Louis Diamond, and this is the Diamond Podcast for Financial Advisors.
At Diamond Consultants, we help elite advisors identify the right environment for their businesses to thrive, whether that's at a wirehouse, boutique, or independent firm. With nearly 3 decades of experience, we've guided thousands of advisors and represented more than $250 billion in assets transitioned. And each year, 1 in 4 advisors managing $1 billion or more who change firms are our clients. Our process is education-driven and based on building relationships, starting as your strategic partner well before you're even thinking of a move. To schedule a confidential conversation, call us at 908-879-1002. Wondering why advisors change firms and where they're headed? Are transition deals going up or down? Those very questions and more inspired us to create our annual Advisor Transition Report. It's the award-winning, data-driven resource designed for advisors that connects the dots between the motivations around movement and the firm's appetite for top talent. Arm yourself with the knowledge you need to make smart decisions. Download your copy at diamond-consultants.com/transition report.
When the news broke that a team managing $129 billion in client assets left Merrill to launch OpenArc Corporate Advisory, the headline focused on the sheer scale of the move and the legal firestorm that followed. But this transition represents even more, a defining moment for the independent wealth management movement and a demonstration of the evolution of the industry landscape as a whole. For years, independence has steadily been chipping away at wirehouse dominance. Yet OpenArc is proof that even the most elite and institutionally focused advisor teams see greater opportunity in launching their own firm. That's where Dynasty Financial Partners comes in. With Shirl Penney's leadership, Dynasty has become synonymous with enabling large, complex teams to make the leap to independence, providing the scale, capital, and infrastructure needed to compete at the very top of the industry. And with OpenArc, Dynasty has helped one of the largest ever breakaways, and quite possibly one of the largest transitions in the history of our industry, launch a new enterprise built for the future. In this episode, Shirl shares why the OpenArc deal is such a landmark moment, what it signals about the evolution of the RIA model in the industry at large, and how it may influence other large teams contemplating their own futures. He also highlights key learnings for advisors watching this transition closely and what it reveals about the next chapter of industry competition. It's a rare inside look at a landmark deal in wealth management and the insights it offers for advisors and firms across the industry. So let's get to it. Shirl, thanks so much for joining us today. Very special episode and very excited to bat this concept around with you.
Thank you, Louis. Thanks for having me. I'm equally as excited.
Very good. Well, let's start with the headline. It's a big one. And why, in your view, is the GCIAS transition from Merrill such a significant and watershed moment for the industry?
Yeah, it's definitely, like we were saying, incredibly exciting. And I've been hearing from people all across the industry, custodians, asset managers, wealth tech firms, private equity firms. It seems like everyone is unified in the message, which is really to answer the question, why is this so significant? I think it's one of these deals just transcends even the size, the constituents that are here with you and with OpenArc and with us. It's a moment in time where you have essentially, if not the biggest, one of the biggest teams in all of the wirehouses. And certainly we've been a significant player for a long time in the independent movement, and we've moved some of the biggest teams to independence. But by everyone's recollection, this is the biggest team to ever go independent. And on the stock plan and corporate services side, there's always been this thinking that that's the one part that you couldn't replicate on the RIA side. And now we've proven that you, in fact, can, and maybe we'll talk a little bit about it. But it's been a long journey for big teams going independent. When we started the business 15 years ago, 250 million was a big breakaway. And I used to say, someday we're going to do billion-dollar breakaways. And we had to add alternative investments and credit capability and more robust reporting functionality and more access to capital. And all of these things have continued to happen. And the result of that is the path to independence has gotten more well-worn by larger teams, leading up to this moment where literally the Barron's #1 stock plan corporate services team, top 3 Barron's wealth team, biggest team ever to do it, just went independent. So I think that's why there's just such an incredible buzz around the industry about this being one of those moments I think that people will always remember who follow the independent movement. To have the biggest team in the industry go independent is something that I just think is incredibly significant.
Yeah, two quick thoughts to what you just said, Shirl, is I think the first one is this kind of feels like the Luminous Capital moment for a breakaway team. Like Luminous is still a deal we talk about 12, 15 years after it happened, which was the major Merrill PBIG team that went independent and then sold to First Republic for, at the time, we thought it was a big number. They've gotten bigger. And that kind of solidified the fact that a big wirehouse team could go independent and monetize for a massive number. It almost feels like this is the RIA movement in a different ways, Luminous Capital moment, and a deal we'll be talking about 15 years from now. I know you and I will never forget it, but it feels like something the industry will remember for a very long while. Do you agree with that?
I totally agree. And it's funny you'd mentioned Luminous. When I was thinking about different key moments last, call it 20 years in the independent space and the movement to the independent space, that one's on my list. And some of the capital participants coming into the space and innovation and Dynasties walk down memory lane, Summit Trail launching that famous photo of the partners walking together down 6th Avenue, and to see how they've grown now to over 25 billion in their own right. There's definitely quite a number of stories and moments in time, I think, that really stand out, where the art of what is possible seems to continue to get pushed and evolved in this long-term trend turn movement of advisors and clients choosing independence in the RIA model for the best way that they want to be served and build their business. And this is right up there as big as any moment, just taking Dynasty out of it. And obviously we're super proud to have helped and played a role here. But if this was a deal that we were not involved in, I'd still be celebrating on behalf of the space, because it just is further signaling to the market that, as I've said now for a while, eventually all roads are going to lead to the RIA space.
No doubt. Yeah, I'm even trying to think beyond the impact on the RIA world, which is obviously significant. But I think this probably has to be, maybe not officially, but in my mind at least, the largest transition of any team from a captive environment moving anywhere. Forget about the RIA world. And to me, like, one of the big takeaways is no matter how big, how complex, how sophisticated, how, with air quotes up, tied in you are, that basically when there's a will, there's a way. And hopefully this is a wake-up call to such advisory teams at every firm, even ones who aren't interested in becoming business owners, that this is possible. I think 2 years ago, we represented the ESOP group, which was a large and complex business from UBS that went to RBC. This is a different stratosphere as far as size, but that was another example of a team that everyone thought was forever captive to their firm and into the wirehouse world, but proof of concept that one firm or one model doesn't have a lock or a monopoly on what the best advisors are going to do to succeed into the future.
I think that's really well said. And what we do in large part is we check boxes to make things possible for people to live their dream of owning and operating their own business, and then ultimately being their growth partner and helping them grow through the life cycle of the business. And there have been quite a number of boxes along the way that we've worked hard and innovated to be able to check. But I think with this deal, given the size and complexity of it, the fact that it's institutional as well as private wealth and retail, the number of advisors, the need for product depth in terms of traditional and alternative product set the team uses for robust access to capital markets, hedging and monetization of concentrated positions, given the executives they serve. This one, again, to me, really signifies the market that every box has been checked, and regardless of how big or what your focus is, the independent space allows for you to build and own and operate your business and service your clients in a more open architecture, pun intended in terms of the name, in a way that allows you to customize the client service model the way you want to service your clients and the way you want to take care of your employees.
No doubt about it. And you hit on some of this, but maybe you can elaborate. When you think about this team's and now businesses' choice to partner with Dynasty and Schwab and to take their business into the independent world, what do you see as the critical drivers that even made independence possible and made it the best possible fit for their needs?
Yeah, and you and I have talked about this in the past, and maybe some of the listeners have heard us talk about it because it's so central to the why of why we started Dynasty, as we talk about the triangulation of advice. And this really came to me years ago working with a lot of family offices. I realized the way the ultra wealthy in this country receive their financial advice is more triangulated. So they have an advisor, family office sits on the same side of the table. They can go out and custody their assets wherever they think is the best counterparty to house their assets. And then they have enough resources that they can shop the street and force banks, whether it's credit or insurance or asset managers, to compete. And then they have technology that ties it together. And part of the founding of Dynasty was how could we democratize the triangulation of advice so that we could aggregate hundreds of billions of dollars of buying power and then put it behind independent advisors, allow them to sit on the same side of the table with their clients, get paid to give advice, custody wherever they would like, and then have significant buying power and leverage to shop the street on behalf of those clients. And then Dynasty is the tech infrastructure, the middle and back office, if you will, that ties that together. And I always thought over the past 10 years or so since being in the space, it would be incredibly powerful if you would be able to take the triangulation advice and apply it to the corporate space, where you could have a team give independent advice to the corporation, whether it's advising them on various benefits, 401k, advising them on their stock plan, and then you could administer the plan, just something which would be in this model similar to custody in a third-party location where you think is best for the client. And then you can shop the street again from a product fulfillment standpoint, from a reinvestment perspective on behalf of those executives in the plan. And that's really the vision here, is for the first time you're going to be able to put together, and what OpenArc is doing is leveraging triangulation advice where you can deliver independent advice separate from custody and separate from product manufacturing and administration on the plan front in a truly open architecture and independent environment, and really bring together that level of service and independent guidance to both the company and the executives that work at that company. And it's made possible because of innovation and technology, the product access that's evolved in the space over the last decade or so, and through innovative partnerships with, in this case, with Schwab, who has a very strong stock plan franchise where, they're going to be able to partner with OpenArc and with us to leverage the stock plan administration chassis so we can service companies on that chassis, work with the executives, deliver high quality financial planning. And then when they're looking to exercise and sell parts of their equity, they'll be able then to invest with the advisors at OpenArc, leveraging the ability now to access products and services in a competitive construct across the entire industry. And Dynasty will provide all the integrated solutions that they'll need on the business side, all of their desktop technology, all of the business analytics to help them run the business, support them from a capital standpoint because they're going to grow and they're going to grow fast. Literally today already, Lewis, I've had quite a number of advisors, and Dynasty on our website has had quite a number of advisors reach out and ask to be introduced to the team because they think the model is so innovative and they have interest in joining. I think they'll need a few weeks to process everything before advisors start to join. But I think it's going to be an incredible growth story, not just organically, because they have built such a great machine to be able to care for the companies and the employees, but because they're also remarkable people. They have a great culture. And I think that's great people attract other great people. And I think they're going to grow tremendously inorganic by adding other like-minded advisors who want to take advantage of this very unique and creative model that they've developed.
Yeah, no doubt about it. A lot to unpack with what you said. A couple of thoughts and questions came from it. So I guess the first one is, if you've had this vision for about a decade now, what was it that was missing until now to pull it off? Was it there's only so many teams like this that exist, or there's probably no other teams that exist like this? So was it the people that were needed to take this journey with you? Was it the technology? Was it custodial capabilities? Was it just the industry was ready for it? Like, what would you pinpoint as why now?
Yeah, I think it's all of those things. And I would also add leadership, the ability to lean in. I think about the leadership team at Schwab being willing to sit down and have a creative conversation about how we could take all of the incredible firepower of Schwab, which is, if you think about it, Lewis, this is such an incredible opportunity and partnership for Schwab because it touches all parts of their franchise, whether it's stock plan and retail, whether it's certainly the institutional side with custody. It will require leveraging the Schwab bank. A lot of people don't realize that Schwab has an incredible banking capability that will be able to be leveraged here by the advisors on behalf of their clients. Schwab's asset management business, certainly there'll be opportunity set there. So from Rick Worcester's perspective, this is a pretty incredible case study, right, about the power of partnering with Dynasty, and our alignment has been a strong one. And then leveraging that partnership to bring to bear such an innovative move with a client that's going to leverage all of the great parts of the organization and their ability and our ability to lean in and help them grow. So it's capabilities, it's leadership, it's capital, it's the ability to integrate technology so that you can bring together data in a way that makes it more seamless for the advisors and their clients. It's all of those things. Also access to investment banks, right? You think about on a go-forward basis, as they start to cover some large organizations, those organizations are going to want access to investment banking. They're going to want access to very robust capital market trading capabilities. And this team is going to be able to be an institutional coverage person on behalf of essentially the whole industry on how they cover corporations and their executives backed by Dynasty. And it's a very exciting moment in time where I don't think the playing field now has been leveled. I think it has been tilted in the favor of the independent advisor, irrespective of the type of business that they choose to build, inclusive of corporate services.
It's so interesting. Even just to take an example, like obviously you probably don't know, we don't want to know if you do, the names of some of the corporations that this group covers. So maybe let's just take an example. Let's pick a random company. Let's say it's Meta. And if OpenArc is facing off with Meta and an executive at Meta, let's say it's Mark Zuckerberg, what is it differently now with tangible examples that OpenArc can offer to Mr. Zuckerberg that they couldn't offer when they were at Merrill? How does that unfold?
Yeah, and not to pick any particular name or not to compare this to any of their previous employers, because I'll be candid, the conversation with the team, they were very proud of where they grew up in the business. And I know you agree with this, Louis, because you do this a lot. And thank you, by the way, for introducing us to this team and being such a great partner here. But the most successful entrepreneurs moving into the space are the ones that are running towards something, not necessarily running away from something. And for them, it was wanting to own a business and do something that's more independent. And they thought it was what was in the best interest of their clients. This, as you well know, some of these large teams can get astronomical amount of money to go to another wirehouse. But, there are advisors that are saying, look, we believe so strongly that what's in the best interest of our clients and our employees, we want to go independent and make an investment to do what's right for those constituents. And you have to pass up a lot of short-term opportunity. I guess you can be long-term greedy in terms of enterprise value and the like over time, but it's a certain type of individual that will do that, as you well know. But why it's an enhanced offering now, to your question, is if you have an executive that is coming through a stock plan, and typically the way it would work is you'll go on site, you'll provide executive education for a room full of the executives at whatever company it might be. And then you'll line up individual meetings with the executives over the next few days to work with them one-on-one. And what the advisors will now be able to do is offer choice. They'll be able to be a true fiduciary on behalf of those clients. Whereas in a captive environment where you don't have choice, you can't do that. So to give you a more tangible example, you have an executive at a public company, and that executive decides that they want to hedge their position. Regardless of what wirehouse you worked at, you only have one choice. You have to go to your desk and hope that you can get good pricing and do your best to advocate, but you're advocating as an employee of that firm. Versus now what OpenArc can do is go out to 4 or 5 different desks in that scenario and force competition to get best pricing execution for that client. Maybe the client comes in and says, I'd like to have a mortgage. And previously, the bank that you worked for, you had one choice. You couldn't say, hey, this other bank is providing better pricing, better terms. Because if you did that, the advisors, as you know, would be fired or selling away. So now through open architecture, they're going to be able to advise the executives through a more pure advisory model, and then have the ability to execute in a way that they think is best. And the same thing is true on the corporate side. If one of the corporations was looking to do a certain transaction, they're now going to have access to multiple investment banks, not just access to the one that they used to work at. They're going to have access to multiple different partners around the industry that they can bring together to give advice and to help execute on behalf of the company as well. So it's an innovative model. I learned a long time ago, the market's always right. So we'll find out how fast they grow and if clients really prefer this model. But for someone who has spent parts of my career on, the side of the business working with corporate executives, as well as obviously spending a lot of time of my career in wealth management, I suspect that this time has come, and it's going to inspire others to do it. And what we haven't talked as much about, but what I'm super excited about, is I think the result of that is ultimately consumers are going to win, because they're going to have more choice. They're going to have access to more modern technology. They're going to win from more competitive pricing scenarios. And I just think the wave of the future in this industry is to separate where advice is given from where products are manufactured and sold. And I think that's going to hold true for institutions as well as individuals.
Yeah. I mean, it seems ridiculously compelling. I mean, I think you're right that time will tell and the market will tell how true that is. And even if it's spot on, which I think it is, if ultimately executives and corporations don't buy into it for whatever reason, then we got to reassess how impactful it is. But I have a hunch that once they get a taste of what this world is like, that it's going to be a snowball effect of other corporations rushing to work in a construct like this. Something else you mentioned before, wanted to comment on is like so many advisors I speak with, they might run big businesses or even small businesses, but the deals that are being offered by the major players, the short-term trade is as rich as it's ever been. So I'm sure there's a lot of people who saw this and were like, are these guys crazy? They're signing up for all this work, all this extra lift, and they're not getting paid hundreds of millions of dollars in order to make the move. So to me, like one of my big learnings here too is it's not all about the short term. Like everyone is entitled to their own opinions. Everyone has their own personal financial situations, but we've seen it before. There's ample now examples of teams that actively decided not to take the big check and are much better off for it because they're able to grow faster, build with complete autonomy, and ultimately sell pieces of the business to private equity or sell the entire business one day for significantly more at capital gains than they could buy a ordinary income deal at a wirehouse or a regional firm, et cetera. So to me, like this is like case study number one, like they'll be the poster child for issuing the biggest check in order to build for the future, which I love. I mean, we work with every firm, every type of firm. We don't have a horse in the race, but it is always very exciting to see teams push their chips to the middle of the table and truly, really bet on themselves and bet on their future.
Yeah, that's so well said, Louis. I couldn't agree more. But as I think I'm a fellow at the Aspen Institute, I'm in YPO. I was E&Y Entrepreneur of the Year in Florida, which puts me in their network and community of entrepreneurs. And it's a long way of saying I get to spend plenty of time around great entrepreneurs. And, you know, you find over time, right, there's really two types. There's what I call missionaries, and then there are mercenaries. And the mercenaries, the short-term greedy, sometimes they can do fine and in the short term, and they're trying to solve an issue in the near term in a way that maximizes financial gain. And the missionaries, they see something bigger, right? And they're committed to the cause. And sometimes that also helps get through the difficult times, right? Because you're driven by something that's bigger than yourself and a mission. And the desire to improve financial wellness in this country is so important to me as a mission and part of the why, which allowed me to go 2 years, 7 months, and 4 days without a paycheck when I was starting Dynasty, as we've also talked about in the past. But it's interesting though, if you look out over a period of time, you look out over a period of a decade, let's say, almost always from an economic standpoint, the missionaries end up better off than the mercenaries, which is quite remarkable when you think about it. So yes, passing on some short-term opportunity to get paid and instead make an investment that you believe is into something that, you know, is noble and right and meaningful and is going to change the lives of so many, your clients, your team members who are all going to have equity and be aligned with you. One of the things I'm sure you saw in the press release, which I just so really enjoy about this group of people, is they're so charitable. They're launching a business, making all this investment while at the same time launching their own corporate charity. They really believe in community engagement and doing what's right and helping their clients. So look, I think they're going to be incredibly successful because of they're on a mission. They really are committed to doing something that's innovative, that's different, and have ultimate conviction that by doing it this way, that their clients and their team members will be better off as a result of it. And I do believe, as you mentioned earlier, I think, and again, my phone, I don't remember the last time it's blown up the way it has in the last couple of days. And I think people are inspired. I think they're inspired by their courage, by the innovative nature of what they're doing here, understanding that this is driven by missionaries that believe that they will win by doing the right thing over a long period of time. And I think it's going to have significant influence. It is going to be talked about for years, as we've mentioned. But more than that, I think it's going to cause action and encourage action of others to follow suit. And they're going to say, look, if they can do it with the size and complexity of that business, then why can't I do it? And I suspect that your business, our business, we're both very busy to begin with, but we probably get a lot busier.
Yeah, absolutely. Yeah, it's so interesting because it's like scale is what everyone talks about in this industry. Like you have to have scale to start an RIA, you have to have scale to continue to compete, et cetera. I think in many cases, though, scale can actually be a detriment because it just means complexity, more mouths to feed, more voices, more stakeholders, more conflicting priorities. Like this was a great example. Like they were almost in many ways like too big, but it was the leadership and the fact that they really ran like a business within a business. Like they were running a bona fide financial services corporation within a major corporation with partner levels, with different rungs of advisors, with the COO, a CFO, heads of business lines. Like I think the structure that they had made this possible. And you probably see it too, but I'm starting to see more teams, maybe not of the same size, but the multiple billion-dollar teams make the investment to have a professional COO, in some cases a professional CEO who's not a client-facing advisor, and just creating these kind of fiefdoms within a firm that give them the optionality to go and follow suit of something that OpenArc did. So just a thought, if you have any comments on that.
Yeah, there's definitely an incredible professionalization that's happening in the space for sure. They absolutely are one singular team. I think when people might look at the numbers and might think that it's multiple teams, but it's not. It's actually one very substantial team that has been built over the years by recruiting. They're really good at mentoring and recruiting and bringing in young advisors and building them up over time. They have their own very unique culture. They care about each other, again, being one singular team. And I do think that that's unique. Not that we don't see it with other teams as well, but there's a genuine care for each other. And when you have great teammates that can align behind a mission, a lot of things can get done. And I think we're going to be hearing a lot about this team going forward in terms of what's possible. And like I said, I think they're going to build a very substantial business. And there's other substantial businesses that have already been built in the REA space. It's always interesting to me, and I think that this is being noticed by more and more of the bigger wirehouse teams, where they might go to industry events with advisors from across the industry, from different channels. The advisors that are coming into those events in private jets, those are the ones that own REAs. And not to name names, but there are literally billionaires now that have been created, and I know a number of them that are advisors who built substantial scaled businesses in the REA space. And that's just not possible inside of a wirehouse where it's W-2. There's far less flexibility in terms of actual equity ownership. You could have a massive business, and if you go to retire, right, and you go into one of the sunset programs, right, you're monetizing your business in a multiple of revenue that is fully taxed at income tax levels. Whereas advisors who go independent, even at the end of their career, have the ability to move business over, maximize the margins in the business. Valuations are at an all-time high, as we well know at Dynasty, because we operate one of the top investment banks in the space. And then when you go to sell, you can sell at long-term capital gains. And it's a perfect storm. There's just so many aspects of why I don't want to use the term better, because for some people, they might be very happy to be an employee model, and God bless them. But I think once advisors, and I would encourage advisors, just get educated, right? Give Diamond Consultants a call, right? Give Dynasty a call. Just get educated. And once you're educated and there's a certain model that's right for you that you might move to, or you might decide that now that you're educated, you're best off staying where you are. But you might get educated and have your eyes open and say, wow, I didn't realize that would be possible, that I could own and operate my own business, and I could do all these things in the independent space, and I could have a substantial liquidity event at some point down the road that I never even dreamed of. So it's important to carve out a little bit of time every once in a while to work on your business as opposed to into it. Take that half step back, look at what's happening around you, get educated, and that will allow you to make the best decisions for you, your team, and ultimately your family.
I was going to ask you for some parting thoughts, but I think you just put a bow on it. I couldn't agree with you more. It's a concept that I've been thinking about is have and has these crazy valuations of RIAs. And like you said, the richest advisors in the industry, they own and operate RIAs for the most part.
Yes.
Is that dynamic going to drive the next wave of movement into the space? Like, I feel like in the beginning of the breakaway movement, it was about, I want flexibility and I don't want to be told no, and I want to get away from a big bank. And we still get some of that, but I feel like now it's about enterprise building. It's about maximizing your career earnings. It's about creating legacy and creating value. And there's so much capital and so many proof points that if you take the right actions like OpenArc did, that you can reap the rewards at the other end of the rainbow, whether that's financial, whether it's lifestyle, whether it's legacy. Let's stop here. You probably have a lot of calls to return, a lot of hands to shake where you are. But this was a lot of fun, Shirl. I hope we have another event like this. I'm going to guess we're not going to have one like this for quite a while, but it's deals like this that set the course of the industry. It's what people remember. And I think we'll look back on this in 3 years or 5 years and say, this was the luminous moment. This was the moment we can trace back that changed the trajectory of the industry. And I'm so grateful to have played a part in this with you and your team.
Yeah, no, I appreciate it. I think after today, it's become much harder for somebody to say, I can't go independent because of X, Y, or Z. I think what has been demonstrated here is that anything is possible if set out to truly want to build your own business and you find the right partners, you can do it. So my real parting message is I do hope that people are inspired by it. It certainly is inspiring to me. It's the culmination of so much of my career and experience across the industry, and I'm super proud of it. There's more moments, hopefully, like this to come for Dynasty and my career, but at this particular moment, I just really think that what we have done here collectively, and again, thank you, is we've made a little dent in the universe. We've, I think, made a 200-plus-year-old industry a little bit better by helping this to happen. And again, I really hope that it inspires people to think big and dream bigger. And if they need some sage guidance on the way, I hope they give you a call, my friend. So thank you.
Thank you, Shirl.
As a financial advisor, you hold yourself to the highest standards of integrity, honesty, and credibility. You are successful because you take your professional responsibility seriously and are dedicated to your clients. But are you living your best business life? Are your goals aligned with your firm's, or could a better option exist? Should I Stay or Should I Go is a book written with you in mind. It's a self-guided journey that walks you through the key steps that we take with our advisor clients. This strategic thought process and roadmap to professional self-discovery is designed to help you ask the right questions and think critically and objectively, whether you're considering change or not. Learn how to get your copy at diamond-consultants.com/thebook.